Thanks, Kathy. I appreciate the quick and kind introduction. Before I get started, as always, just want to do a quick test of picture and sound. Please type a Y in the chat box or let me know that you can hear my voice and see the projection. That would be great. I want to thank everybody for being here. Thank you to Online Trader Central and Kathy and her team for putting the event together. It's always great to be around like-minded traders, and hopefully you guys enjoy the event. So today what we're going to do is we're going to teach you how to trade arbitrage support and resistance levels. And arbitrage is a very advanced term, often used in, say, the options markets, but it can be transferred into futures, forex, stocks, options. It's really a term that describes basically the discrepancy between two factors. And what we're going to be doing today is I'm going to be teaching you how we use market profile software to identify levels of support and resistance for trading using arbitrage. Okay, so before I get started, as always, I do need to cover a quick disclaimer in order for us to get into the actual strategies. Because we are looking at strategies, I will be showing you buy and sell examples. I'm going to be showing you trades that I took today in our trading room in front of a live audience. I need to cover a disclaimer. And so if you are not aware of the risks and you need further information on the associated risks and disclaimers, please take a second to read this. And if you have questions, send us an email to support@neurostreet.com. Okay. So I like to keep things quick and efficient because I'd rather spend more time on the charts. I'd rather spend more time showing you how to trade, where to trade, why we trade those levels, rather than staying in the slides for too long. Now, I do need to cover some slides. It's really important to cover the education first and then go into the demonstration. But more importantly, if you're not able to attend the entire event, or if you need assistance, maybe I don't look at a market that you're trading, or maybe we didn't get a chance to go over all of your questions, or whatever the case may be, we have a team of trading account managers on standby after the event and following up to your emails, where we're going to be able to get you to book one-on-one demos if you need one. Like if you'd like to look at the charts for your markets on your own, we can set that up for you as well. And we also have special pricing reserved for our account managers who are traders using our tools and are qualified to help get your questions answered quickly and efficiently. Okay, so knowing that, let's get started. I'm going to talk about the statistical edge overview of using market profile. I think it's absolutely important you understand why it's critical, why the institutions use it, why the hedge funds use it, why the money managers use it, why the firms use it, and why retail traders must learn how to read a profile if they are going to stand any type of consistency in this space. The next one here is I want to talk about the 3 market profile problems and the solutions in which the TPO software solves those problems for. I'm going to be spending some time going over live demos. I want to show you the 2 trades I took today, one on the Russell, one on natural gas futures trades. I run a futures trading room right now using the arbitrage software. And I'm going to give you a step-by-step strategy. I think if you're going to learn how to use a tool, if you're going to learn how to use software and make it an advantage for your business, and you're looking to become consistent using it, you must be learning in a step-by-step fashion. If you do not break it down step-by-step, it's very hard for us to follow a rules-based approach, okay? Knowing that, at the end of the event, if you've got questions, Kathy's already given me the green light. We can spend a little bit of time going over it. But more importantly, I'm going to give you a free guest pass to our trading room. In fact, what I'll do right now is I'm going to give that to you now. So what I'm going to do is I'm going to type that in the chat box now for Kathy and the team here. Please register. There it is. Go here and register. There it is. You've got it, Kathy. Perfect. Just want to make sure you guys got it and you guys have advantage of that, so you can join me tomorrow morning at 8:30 a.m. Eastern Standard Time. So what is a market profile chart? For those of you that got started trading, looking at candlesticks, looking at Renko charts, looking at range bars, volume, time, whatever the case may be, those are all different ways of breaking down financial market data. Market profile charts or volume profile charts are simply a charting technique used for locating value on an intraday basis. So knowing this, all we're doing is we're looking at the market from a different lens. Where a lot of traders get overwhelmed is they don't understand it. They see a lot of different visual graphics. Maybe it's confusing at first, but It's absolutely simple once you learn the 3 patterns. It's absolutely very, very attainable for you to learn this stuff. And it's actually easier to read the market once you understand it. In fact, once I learned this, once I learned how to read the profile charts, the way in which I looked at financial trading changed. I don't think I could ever go back to looking at a financial chart the same way I ever did after knowing about the profiles. Because it's how the actual market works. It's how the auction works. It's how the market and the bigger traders read financial value. And as a retail trader, it's critical that we teach you how to do it, right? Especially if you're using other strategies, it's still an advantage to look at market profile charting techniques, So I want to talk a little bit about what it's doing very quickly from a statistical edge perspective. We're looking at price, volume, and time measured over what we call a bell-shaped curve. Now, the difference here is that if you're in statistics class, whoa, that's the wrong color. Definitely don't want to use that one. Let's say you're in a statistics math class. You're going to get a textbook, and it's going to show you that the bell-shaped curve looks like this. But a lot of traders don't realize the financial markets is a very advanced environment for a lot of mathematical people. And when used correctly, the bell-shaped curve, when applied over volume, price, and time, can be the most, I guess you'd say, the best tool in your toolbox. The only difference is we look at it from a different perspective, This here, is where most of the activity would take place in a bell-shaped curve. When things happen outside here, they want to go back. When things happen outside here, they want to go back. It's like a magnet. But you should be saying to yourself, Sean, I don't really get it. I don't really see how you can look at a chart like that. Well, the truth is you can't. You can't look at a chart like that. You got to look at a chart like this because we flip it on its left axis. So all we're doing is turning the mathematical read of price, volume, and time, and we're turning it vertically. So now you can see the same example right here. Now you don't need to worry about all this. Let's cross all that off. Let's cross all this stuff off. We don't need to worry about any of that stuff. We don't need the numbers. We don't need that. We don't need that. We don't need any of the noise. I like to teach traders, keep it simple. All that matters is you understand what it's doing from a mathematical perspective. When you have a bell-shaped curve, statistically, this is what we consider the mean, which means the average, When things go away from something such as the mean, when things go away from the mean, it acts like a magnet. It's kind of like, like this. Just pretend it's like a magnet. Pretend this entire green area is like a magnet. So when price gets up here, price gets down here, the aspect of understanding what this is doing statistically, mathematically, price gets up, wants to revert back to the mean. Price gets down, wants to revert back to the mean. The goal here is to understand that any time price gets outside the value area, this is what we consider the value area, the average area, the magnet, if you will, the noise zone, if you will. Whenever price, let's say you got an uptrend, price trades up, it's going to want to go back. Let's say you got a downtrend, price trades down and wants to go back up. Maybe you're in an oscillating market, price goes up, down, wants to go back, up, down. Doesn't matter if you're in a range or in a trend, price will want to revert back to the mean. That's exactly what statistical edge overview means. So in a nutshell, what we're doing is we're going to study how to identify when price is outside the average value areas and when they're likely to revert back to the mean. When they're likely going to revert back to value. It's very simple. And my job is to teach you how to read the patterns so that you can understand why that's important. Because everything up here is considered expensive. everything down here is considered cheap. So if I have a profile that looks like this, anything up here is considered expensive, anything down here is cheap. Okay, now we're going to take this one step further because there's 3 patterns you must absolutely learn. And it's absolutely critical that you learn them. So let's kind of talk a little bit about the 3 biggest problems where most market profile traders get stuck with. The first one is not knowing the 3 patterns that the market profile charting techniques provide us. So what I'd like to do is I'd like to explain and teach you. I'd like to teach you the 3 patterns. There is only ever 3. There will never be more than 3. There will never be less than 3. There is only ever 3. That's a huge advantage for you because unlike other types of strategies or other types of charting techniques or trading systems, you have less to learn and it never changes, which is super clean if you ask me. Now, the other one is understanding the difference between singular and multimodal distribution. Basically what that means is knowing the difference between a full day profile versus a dynamic profile that has happened over the course of the day. Okay, this is an example of a profile that has changed over the day. You can see there's 3 separate profiles in this chart rather than having one giant daily profile. What it means is being able to identify the difference between a daily and a split market. And we're going to talk about that in a moment. And then the other one is not really understanding the relationship between volume and time, which is what creates arbitrage. Okay? Arbitrage is the edge. Arbitrage are anomalies in the market that, if learned how to trade correctly, can produce a completely different world for you. So what do I mean by that? If you learn to do what I'm going to show you today, you can change the course of your trading career for the rest of your lives. I know this because we have students that have come into our trading school, been in our trading rooms for years, and once they started applying these things, their entire business changed. They started making money. They started having winning streaks. I had a guy in my trading room this morning who says he's had 10 winning days in a row. He hasn't taken a loss. Right? I can put you in touch with him if you'd like. I'm sure he'd share his experience with you. We have traders from all over the world that have struggled, have lost money, have broken even, have had emotional problems because of the losses. And when they start learning how to trade this type of approach, their entire career has changed. So the answer is, are you in a position where you would like to make a change? Because I can show you how to do that, and that's what we're going to do here today. And if I don't get through to you today, in the educational efforts of this presentation, what I'd like to do is I'd like to encourage you to join me over the next couple weeks in our trading room and watch and learn for yourself. Okay? So that being said, let's kind of kick things off. As I said, there's only 3 patterns. You only ever have to learn 3 patterns. There's a D pattern, there's a P pattern, and there's a B pattern. So what does this mean? Okay, let's go up here and draw this. A D pattern is like this. There's a value area high. There's a value area low. There's a P pattern. There's a value area high and a low. There's a B pattern. Value area high, value area low. What does this mean? Well, it means you only need to first learn 3 things that I'm going to teach you very simple. What this means, this is a range. It's an oscillating range. Sometimes the market comes up, sometimes the market comes down, but it stays back inside the range like that. Could be, maybe look a little different, maybe not. This one is what we call a range extension, normally happening after news. You get price going from point A to point B. Normally the market will react. And then what ends up happening? You get these big breakout bars and the market goes up and then it consolidates. And if you notice, that's what a profile does. It consolidates. When price goes down, they go from point A to point B. This we call a range extension. The market breaks down. You might know it as a downtrend or an uptrend. That's exactly what this is. The market breaks up, pulls back, retraces like that. Maybe you want to go up like that, right? This one breaks down, the market breaks down, pulls back, maybe it goes like that. Downtrend, right? You might be thinking the market is going into an uptrend because somebody drew a trend line there. You might be thinking the market's breaking down because something happened on a Twitter feed and the market's, falling out of the bed. That's not how the markets work. That's not how the financial markets work. That's not how institutions make their money. Institutions and professional traders can only make money in business if they can understand cheap and expensive price levels. If you are owning a restaurant and you had to buy inventory for your business, you must know the cost of your goods in order for you to make a profit to sell them. Therefore, if you do not know the cost of your inventory, you cannot sell them for a margin and make a profit. If you are a trader and you do not know where to buy things at a cheap price and sell them at an expensive price, it will be very difficult for you to make money. That's our job as a financial trader. So when we think about this, this is cheap down here, this is expensive. This is cheap down here, this is expensive. This is expensive up here, this is cheap down here. Why do you think the market only trends 20% of the time and the rest of the time it's oscillating to some degree? Because the entire world would prefer an oscillating market. The big banks, the market makers, the money makers, the margin guys, the brokers, the hedge funds, it doesn't matter. The sell side street, the buy side street, anybody that has to move money around needs to buy low, sell high. That's the worst jargon we can ever have in a financial industry because nobody knows where to identify cheap and expensive price levels. That's what market profile charting techniques do. They teach you that. So the goal here is to always understand how to read this and realize that the market, when it's trending, is trying to find balance. When a market goes up, it's going up and it pulls back and it's going up and it's trying to find this. It's trying to find where the world can stop the market and keep it in what we call balance. When a market goes down, it's trying to find this. It's trying to find balance because everybody then can understand expensive and cheap. So if you can only read expensive and cheap, and you know how to find it all the time, you are 10 times more ahead than 90% of the traders in the world. And then you can actually consider yourself to become a much more experienced and profitable trader over time once you learn how to apply the strategies in which we're going to show you. So let's go take a look at some charts. Keeping it simple. Let's go take a look at a profile chart. I'm going to turn things down a little bit. This is a chart of the ES, by the way. Doesn't really matter. Okay, so it doesn't matter the market we're going to look at. I'm just going to look at it. You can see that here we're in a pattern. I can tell you right now, just by looking at this profile, okay, that this is cheap and this is expensive. And anytime the market got up here and anytime the market got down here, it went back this way. I don't even need a price chart to see that. I just know that's how the financial markets work. So let me turn on the price bars for a second and show you that. That's how the financial markets works, ladies and gents, because that's what the entire world wants it to do. That's how the facilitation of capital moves from one account to the other, from one country to the other, from one objective to the other. Let's take a look at a different example. I can tell you right now that just looking at this chart, if we draw the patterns, P, P, D, D, I can tell you right now that the market went sideways here, broke up, went sideways here, broke up, went sideways, broke up, pulled back, and stuck here and closed there. Isn't that an uptrend? Why do you think the market stopped here and stopped there? Stopped here and stopped there. This pattern stopped here because this was cheap and that was expensive. This was cheap and that was expensive. This was expensive. This was cheap. That's what we're talking about. That's how the market works. Let's take a look. There it is. The market traded up, pulled back, traded up, pulled back, broke out, pulled back, broke back up, pulled back, broke back up. Why do you think it's stopping here and stopping here? Stopping here and stopping here, stopping here and stopping here. It's not because you have a moving average. It's not because you have a MACD or you've bought some really fancy line drawing software. None of that matters. And I'll explain why. Because the only three things that matter in the financial market is price, time, and volume. Time measures participation over a period of time. Volume measures amount of participation. And both of these are reflective over price. So yes, you could put other indicators on your chart, but they're always secondary to a profile. It was expensive here. It was cheap here. It was expensive here. It was cheap here. It was expensive there. It was cheap here. Expensive, cheap. What we do is we need to teach you how to trade that. That's the goal today, is to teach you how to trade that in that way or using the arbitrage zones, which are automatically populated on your charts, which we're going to show you here next. Okay. Now let's go back into the slides. Let's go back. Let's go back a little bit. And here we go. The second problem, which we have a solution for, is taking a daily profile and breaking it down into the changing profiles as they occurred over the day. So I'll give you an example. This is what we call a daily profile. But if you take a look, this is what we call a valley and a peak. Peak, peak, valley, and valley. The reason why there are peaks is because they're different value areas that transferred throughout the day. This peak is this one. And these 1, 2, 3 is a collective sum of that. You want to know why traders lose money? It's because when the market is in here, nobody can understand what's cheap or expensive. They're looking at it from a different lens than they should be as a day trader or as a financial trader on smaller time frames. And when I say smaller, I mean anything less than a 30-minute chart. This is a daily breakdown. This is a 30-minute breakdown. And what we do is we take your daily profiles, which are here, and we have an automatic splitting function that allows our software to do all the heavy lifting so that you can end with a D pattern, a P pattern, or a B pattern. And all you need to understand is how to use the tool so that when it's time, you can ascertain expensive, cheap, expensive, cheap, expensive, cheap, expensive, cheap, range extension. There's nothing else you need to learn about how to read the charts. We're going to teach you that. The only thing we're going to show you that's different is how to trade support and resistance using these levels, because what we do is we identify arbitrage at cheap and expensive price levels. So inside of every profile, we have a level of support and we have a level of resistance. I'm going to show you how to identify support and resistance, and then we're going to show you how we trade it. Very simple, very clean, very efficient. Let's go into the chart and show you how we break these profiles down. Okay. And let's give you an example. I'm going to show you the Russell. Let's go into the Russell today. Okay. And I'm going to turn some features off. Okay. And I'm going to auto merge. We have a merging button that basically turns all of our profiles into daily levels. So give it some time. It's just going to load. I'll grab a sip of my trusty old water. We'll give it some time to load here. The software needs to calculate the tick data. Remember, we're on 30-minute charts, and we're going to split the software. So let me just go back and explain. You can see here. Let's go back, and I'll just show you what that looks like from a daily perspective. I'm going to merge it back, and we're just going to I'm going to teach you this. It's really quite revolutionary. So we give it some time here. It needs to let it load. Be patient. There it is. Okay. So let me just kind of explain this. Or actually, we'll do this. We'll go in and we'll turn it onto a profile. Okay. We can see this is daily profiles. Okay. Each one of these profiles is 1 day. This is today. This is yesterday. 2 days back. 3 days back. 4 days back. 5 days back. 6 days back. 7, 8, 9 days back. Okay? You can see that today there was a D-shaped pattern. Yesterday there was a D-shaped pattern. The day before that, more of a B, but semi-D. This was what we call multimodal. 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 This is trimodal. This is whoa. Huge range extension coming down into another pattern. You can see here several patterns. Now to the yes, they do, Arlene. These include the overnight session. Yeah. You can set up different session templates, and you can do regular trading hours. You can do RTH. You can do 24/7. But for the most part, we're keeping it on the entire schedule. Okay. Now, knowing this, okay, it's very hard as a day trader. And I don't like to use the words day trading because we trade profiles on 30-minute time frames. I like to call ourselves profile traders because market profile was designed for 30-minute time frames for institutions. It was a strategy created for institutions because of the need for us to understand balance and value. Therefore, for us, it's very difficult to assess risk on this type of a macro perspective, right? Because this is expensive, this is cheap, but that's an entire day. In the futures markets on the Russell, that could be quite expensive, right? This is expensive, this is cheap. This is expensive, cheap, expensive, cheap. You get the picture, right? And if I turn the charts on, you can see large swings in the market. Like you can't, like most traders aren't sitting there trading for these large swings like that. That's not trading. That's the entire action of a macro day. So what we're going to do is I'm going to split these. I'm going to go back and I'm going to take these and turn them into individual profiles as they unfolded throughout the day. So I hit the auto split. I let the software do its trusty old work because we've spent a lot of time evolving the tool set, making sure that we can help you lighten the load. And then what we do is we just look at how the market reacted. Like I can tell you just here that this day was in a D, it broke up into a D, and then it broke down into a B. So over time it oscillated. We had a push up, it oscillated for a bit. We had a push down, it oscillated for a bit. If I go into this market and I turn on the chart bars, you can see that's exactly what happened. There's no confusion as to how that looks or what it's meant to do. I can tell you that today we were in a range for the most part of the day. We attempted to break out of yesterday's high, and they slammed it back down. I got long here. We'll talk about that. And then they shot it back down, and they just kept it in this range all day. Why do you think they kept it there all day? Because that's where the entire world said, yep, that's the balance. Expensive, cheap. We buy things cheap. We sell them expensive, or on their way to expensive, or in the mean. Okay? So that being said, let's go back into the charts and talk a little bit about arbitrage. Give me a Y if everybody's understanding this to some degree. Obviously, if you're new to this, it might be a new concept. Give me a yes if everybody's following along, if you're engaging, if you like it, if you're learning something. Arlene, Matt, Alvin. Anybody else? There's 4 active guys in here, real active. Ronnie says yes. I'm just making sure everybody's awake. I know it's the end of the day. I appreciate your patience, but I'm a dynamic teacher because those that learn the most and learn the quickest are involved, okay? My job is to make sure you get involved, okay? Arbitrage, what does it mean? Well, first of all, we need to identify what it is. Arbitrage is the difference between time and volume. So you have 2 types of profiles. You can have a volume profile or you can have a market profile. What if we were to overlap them? Market, volume. And each one of these had a value area high, and each one of these had a value area low. Isn't that not a zone? Arbitrage is the discrepancy between volume and time at the highs and at the lows. Because a profile is a profile. It doesn't matter if you're looking at volume or you're looking at time. They're both critical. And therefore, what ends up happening is we then get to auto-populate buy and sell zones for arbitrage support and resistance. And why is this important? Because you can see here that there was a profile here that created an arbitrage level. There was a profile here that created an arbitrage level. There was a profile here that created a buy zone, another buy zone, okay? Another buy zone. We sell resistance, we buy support. So knowing this, this is exactly what we're going to do to plan our trades in advance. The entire concept of what we're doing allows you to find your trades before we get there, see the zone, plan your entry, plan your stop, plan your targets. Let's go into the charts and take a look at what that looks like. Okay. I want to go back here for a second, and I'm just going to, there's a feature up here called zones. I'm going to put on broken zones for a second because broken zones are what was there in the past. Fresh zones are what's still there in the future so that have not been tested. So you can see there's green levels here and there's red levels here. You can see them. So I'm just going to demonstrate there's a buy zone here. There was a buy zone here. There's a sell zone here. here, and here. There was a sell zone here. There was a zone here. There was a buy zone here at one point. There was a sell zone here at one point. What's happening at the sells? What's happening at the buys? They're going back to the mean. What's happening at the sells? They're going back to the mean. What about the buys? They're going back to the mean. What about the sells? They're going back to the mean. What about the buys? Going back to the mean. Remember what I said about mathematical statistical deviation. This pattern has no bearing on whether you're looking at a trading chart, you're studying data for a bunch of trucking companies, if you're studying data about putting a man on the moon, NASA, Tesla, cars, it doesn't matter. Science is science, math is math. When applied to trading, there's no confusion. Mean reversion happens based off statistical analysis, not Bollinger Bands, not Keltner channels. Mean reversion is all about statistical proof. Okay, statistical analysis, statistical proof. So what I'm going to do here is I'm going to show you what we did today. We came into this level. There was an opportunity for us to plan the buy opportunity right here. Okay. I was also looking at getting long down here if we got there. I took an entry at the outer edge of the zone. I took an entry at the outer edge of the zone in the middle. My dollar cost average became here. And then I managed it for a profit. Made a couple $100. Okay. Same thing happened. Natural gas this morning. Take a look. There was a selling opportunity that I did not take. Missed it. There was a buying opportunity that I did. This was a selling opportunity yesterday. Buying opportunity yesterday. Selling opportunities the day before. Buying opportunity the days before. What happened? What happened? I don't make this stuff up. It's how the market works. So knowing this, let's take a look at what happened today on the trade to go long natural gas. Price came down. Okay, price came down. Got long natural gas. Wrote it up for a target. Very simple. And it came back down and then it bounced back off that level. I didn't miss it. I didn't miss it. I got long it right here. Why would I look to... I was looking at a different room. I was looking at a different market, and I didn't take the re-entry. I was analyzing a different trade. I was in the Russell. Yeah, I missed the trade because I was in a different trade. I was trading the Russell long at the time. Price came in, and you can't catch everything at once, right? Running a trading room with lots of traders. Try to catch it all. Maybe we can clone myself, and I can put one of me on each market. That'd be great. Right, so the concept here is to understand what we're doing, because these levels are in advance. So if I go here today and I just take a look at crude oil, I'm very interested in buying crude oil down here at 61.60. I'll explain why. There's a huge ARB level here. This came from this pattern here, projected out from yesterday's trading. I'm also interested in getting along this ARB level and this one. And I might get in with one contract, scale in with another, eventually I'll average in, right, depending on how the market's reacting. Okay, there's an ARB level, huge one. Okay, that's crude oil. Let's take a look at the NASDAQ. NASDAQ came up. NASDAQ just came through a level, actually. Take a look at it. Just reacted off of it. Coming into today, this is a level that we talked about in the trading room today. And the reason why that trade is hitting target right now is because we're in a D-shaped distribution at the high of day from yesterday. So what happens? Price comes in, reverts to the mean. Price goes out. It's going to revert to the mean, guys. At very least, taking a target at structure T1. Okay? At very least, taking a short target at T1 for that. Okay. So when we see this, okay, this is an example. Taking a look at the YM. The YM had some great trades today. I didn't take the YM trade today because I was in the Russell. I don't like to expose myself on index markets. If they're all tanking, I'd rather be in one at a time. In case they both go against me, I don't want to be double leveraged against the trade. Take a look at the long here on the Russell. This is a long trade that took place today. Or sorry, the YM. Okay. And it was a big trade. This is a 30-minute chart. These are big trades, guys. Okay, these are big trades. Catching the lows, catching the highs. Let's take a look at gold. Gold, the trade of the day yesterday was gold. I was in this trade. I didn't get the full trade because I had technology problems. My platform crashed, so when I came back in, I'd already missed it. But this was a huge trade. Price came into this level. A lot of traders took it in our trading room. This was the trade of the day yesterday. And you can just see what happened. Price came in, and it tanked. Right? That's just how it happens. Okay? It's just a wicked trade. Okay? So it's a lot of information to take in as a new trader. A lot of examples. What I'd like to do is I'd like to kind of teach you a step-by-step strategy so that you can understand it. And let's go in here and just find the strategy page for you. Right here. I'm just going to close the office window here, guys. Give me a second. The dogs start barking outside, and not sure if the mic's picking that up or not. Nonetheless, let's carry on. Take a screenshot of this. This is our trade room strategy. You didn't hear it. I could sure hear it. I had to close the window, Kathy. This is our core strategy for our trading system. This is ultimately the entire program that we teach Market Profile. And the reason I'm sharing this with you guys is because I think that if you're going to invest in a tool set, you should understand what we're doing with it. First and foremost, what we do is we always load our charts, we merge and split profiles, and then we look to see if we're in an inside or an outside day. Once we determine that, we identify the levels in which we trade. We look for support to buy. We look for resistance to sell. And then we spend all of the time planning the entries, we plan the stops, we plan the targets, we look at management, and then eventually you just journal your trades and repeat the process. Very simple, step-by-step, top-down approach, very easy to follow, very easy to learn. You'll never see this change. While I run the trading room, you'll never see this change. This will change. This will never change. There's no need for it to change. Okay? So what we're going to do, I'm going to explain what that looks like. Step one is we have a scanner that helps us identify the inside or the outside day of the market. Are we trading in a range environment or are we trading in a trending environment? We want to be trading in range environments for reversal strategies. If the market is in a range environment and the market breaks outside of its average, the goal is to revert back to the mean. Reversals work best on inside days. When the market's outside those ranges, on an outside day, we trade trends. The market's breaking up and breaking up and breaking up outside of the range of yesterday or below yesterday. We teach you to trade the trends. Pull back. Pull back, pull back. 20% of the time, 80% of the time. You have a strategy for both conditions. Trends and oscillating markets. You're either trending or you're oscillating. You always have a strategy to apply in both conditions. Very simple, very easy to understand. Once you see it in the trade room, it'll be easy for you to follow along. Okay. The next step is We identify the arbitrage levels to buy or to sell. We sell resistance, we buy support. Sell resistance, buy support. Right? We look at where this is coming from. That's an arbitrage level. That's an arbitrage level. Arbitrage levels coming out, right? Arb levels here, here. That's how we trade. We trade the levels. And then what we do, we assess management. We look at entry. We look at our stops. We look at our targets. Where are we placing our entry inside the zones? Where are we placing our targets based off the profile? Are we using a combination of anchor points, or are we using a combination of the average volatility? We use both, depending on the condition. Okay? And what I'd like to do is I'd like to show you some examples of trades, trades that are ultimately that are available. I mean, it's very simple. Going into this market right now, I can take a look at the ES. I'll just put the zones on where I'm looking to get where I'm looking to buy the ES. So I'll just kind of explain some examples. I am interested in trading along the ES if it can stay within this range. I am interested in at 2860, 2856, and 2850, without a doubt, especially if the ES can be a stronger market based off correlation. Okay, I am interested in taking a look at the Russell. Let's take a look at the Russell. The Russell's here. Yep, absolutely, Alvin. Yeah, first touch of the levels for sure. If you take a look at the Russell, I took the first touch on this zone today. I just knew that I was scaling in at multiple points. And I was actually planning on scaling in at this level as well. I was actually planning on adding to the position. So I was looking at it here, here, and then I was looking at down there. It never got there. I took my target here real quick on the first bar. Okay. The other thing too is I'm looking at trading the Russell, depending on what happens here. This is a really good point. If you take a look at this, is yesterday's high of day. This is yesterday's low of day. If we break below or we break above, I'll only short and I'll only buy if we're in a D-shaped distribution, because we're outside of the range. And we don't trade trending conditions unless the market profile is telling us that we're going to stay within that range. We might take a bit of heat on these trades before it reverts. Same thing, before it reverts. And that's what we do. We assess the probability before we enter trade location. Very clean, very efficient. Let's take a look at the YM, guys. The YM, let's bring it to current day. Current day, let's turn off broken zones. Where are we getting along? Well, first of all, there's a couple key areas here and here. Nothing above price, so we're really only planning the long side of this market. Where am I planning on getting long? The NASDAQ. The NASDAQ is an interesting market. It's very expensive based on the size of the stops because of the volatility. But knowing this market, won't be planning the short unless it's inside the range. Looking at the long down at 74.80. Down here as well, down there as well. Definitely looking at legging into position 1, 1, and 1, or 1, 1, and 2, depending on how I want to go into that. Just depends on the conditions, and it really depends on correlation across the other markets. Crude oil, definitely interested in crude oil at these areas. I really want to be able to take profits on that. I really think that this could be a big trade if it decides to break down. We've got inventories tomorrow. It'll be interesting to see that. But we normally try to stay away from crude unless we're far enough away from inventory report. Okay. And you can see here on a trending day, today was a trending day for crude, which was really neat to show you the other strategy. The other strategy is when we break outside of the range. Okay. We're only looking to buy cheap. We're only looking to buy cheap and sell expensive. And sell expensive. You can see what happened. We broke out of the range. We pulled back for the pullback. We broke out for the trend. We pulled back for the pullback, and the market closed. We teach you how to buy the pullbacks. The reason I know it's a trending day is because we're above that red dotted line. Anytime the value areas break above the trending lines or be above the range, we know we're going into a trend. You don't have to question your abilities to read the market. The problem is we're information overload. Everybody has so much information coming at them. Webinar, ebook, trade room, guest pass, blah, blah, blah. Let me tell you guys, you're either oscillating or you're trending. There's conditions to identify both. You only need to learn it once. When you're oscillating, you want to trade reversal market strategies. When you're trending, you want to be trading trend strategies. It's just simple as that. Like, it's knowing whether you're in a trend or you're in an oscillating condition. That's how you read the profile. That's why the profile trumps everything, because it tells you there's no subjectivity in understanding the market around that lens. In fact, it's the most objective way to identify the climate of a trading condition. There's no subjective trend lines. There's no subjective moving averages or indicators or any of that. It's value area high, value area low, breaks of value. End of story. It never changes. Okay, so let's take a look at the natural gas market, where we plan on trading this market. Let's take a look. This market doesn't have a lot of trade opportunities. We took them today and missed the one, took the other. There's not a lot of opportunity except for way up here at 750. And so natural gas most likely won't be in play unless something new happens in the overnight off the offset. Gold, we're coming into a level. In fact, this is an area in which I was actually interested in gold. So depending what happens to the overnight, this might be a short right away off the open, off the Globex session, right here as well. That's a big trade. I'd be paying attention to that level at 1301. I would definitely expect the market to give us a nice reaction off of here. And we should also see an ARB level plot here on the open. There'll be a buy zone here near 1292. Okay, so that'll be a definite area for us to plan the trades. The euro, quick and simple. Look at this, guys. It came right to the tick. Okay, it came right to the tick. Doesn't get more clean than that. Like, that's market timing at its finest. This is a sell ARB zone. Okay, what happened? D-shaped distribution. Came out. Revert to the mean. Target 1, target 2, target 3. Okay. Let's continue on. Let's take a look at the last one here, which is the British pound. This was an interesting market. This would have made a trader work to break even. That happens sometimes. It's not all crystal clear. It never will be. And I'll just explain what ended up happening. This market was on my radar from a profile perspective. There's definitely a short opportunity here and a short opportunity here. Going in one contract, if you went in with one contract, your dollar cost average would have been about there. And based off of the way price action reacted, the way in which we manage these trades, you would have been able to at least get down here before it hit the profile at the cheap levels. And with that shift in value, this would have been a situation where you'd be trying to manage for a break even. You probably would have got stopped on that trade if you were not an experienced trader. That's okay. If you've noticed, there wasn't too many stops on these trades that we were talking about, and you will take a stop from time to time. It's our job for you to know how to do that and to manage yourself out of it accordingly. But what you're going to see here is nice long opportunity off the lows here. I was waiting to see if they're going to come down and test the value down here, but they didn't. I waited all morning for that, but they never did. And that's okay. Such is life. C'est la vie. Okay, so that's a breakdown of global assets, traders. Hopefully you found that to be informative. You know, I really encourage traders to join us. A couple things I want to mention is that we do have a free indicator section on our website. If you go in here to NeuroStreet.com, put this in the chat box for you. Okay. You will be able to go to our software drop-down page and take a look at the free indicator section. If you're interested in learning more about the TPO CTV indicator suite that I've talked about today, I'm going to put some links in the chat box here so that you can go and watch some videos at your own time and your own leisure. Okay, because we put a lot of content out on the site. Another thing I want to mention is we have a very active YouTube channel. Okay, a very active YouTube channel. And this active YouTube channel is, we put recaps all the time. We always put that stuff in there, and I really encourage you to take a look at that and subscribe to that, because we put recaps. Today I filmed a recap. Michael from our other room filmed a recap, and it's very active. Tons and tons of videos in here. You can see that we put a lot of content for traders. So if you're interested in learning how to trade or what we're doing, please join us. Okay. More importantly, if you haven't done so already, you want to sign up for a guest pass. you just click on guest pass right here, free pass on the homepage of our website, and you just let us know, are you interested in trading market profile or supply and demand and order flow? Since today is a market profile event, you're obviously wanting to come in and learn that. If you sign up today, and if you're new here, 8:30 a.m. Eastern tomorrow morning, you can come watch me break down live markets and we can trade together if you're interested. Okay, so I encourage you to take advantage of that. Okay, now what I'll do is I'll get right down to it. Okay, just simply put, I'm going to basically give you the breakdown of what our software costs. And it's a package suite, so you're getting the distribution software, you're getting the CTV indicators, which is the order flow subset panel that we didn't talk about today, but there are training videos on that inside the members area. You get access to 2 computers if you have a backup or if you have a main. Support will log onto your computer and set it up for you. Training videos, usage and settings manuals, very complex training, comprehensive videos and training. But more importantly here, your price is not $29.95. So this is super important for me to explain here. That's the retail price. You qualify for a discount. The reason I'm saying you do qualify is because we have an account manager. Okay, all you need to do is go to that link. So let me put it in the chat box for you. Very simple, because we want you to speak to somebody to get your questions answered. It's one thing to buy software from a company. It's another thing to make a good decision. We want you to speak to a trader that's using it, that's used it, that has worked with hundreds of traders around the world that have purchased it, that come into our trade rooms on a daily basis and understand it. And if you have a market that you look at, if you have a time frame that you were looking at, or if you have anything of the nature, our account managers are on standby to work with you directly so they can help you. And that way you can get a discount from them. They have authorization from us, from corporate, to be able to give you the discounts on the software. So if you're interested in joining us and you like what we've seen here and you want to participate, the tool set is yours. It's an investment for your future, and I truly believe that once you learn how to trade market profile, your game will change. The way you look at the market will change. You just need to be around other people that can teach you how to do it properly. Okay, so I want to thank Kathy for letting me come in here, and I think I did a good job, Kathy? I kept it under the hour mark. If anybody in here has any questions, maybe we can leave it at that, and I'm going to close this down and just leave it on the charts for a second. If anybody, no, John, no. No, he's not. So can you take the 30-minute levels and trade them on it? Yes, you can. In fact, we have scalpers that do that. So let's say you want to take the ES. It's a huge reaction point. You're going to get a reaction there. And let's say you want to go down into like a 10-range bar. And you want to scalp order flow. No problem. These are areas of interest. Okay? Areas of interest that you can either trade on the 30 or you can scalp on smaller time frames. Okay, super efficient, super clean, very powerful levels. Okay. If you have any questions, please type them in the chat box. Kathy and I are here on standby to answer them. And if you would like to get in touch with an account manager, not sure what your question was, G. Yeah, maybe it was a PC issue. Didn't see your question come in, but we can definitely answer it. Excellent, guys. So I want to thank you guys for being here. If you want to speak to us directly, support@neurostreet.com. We're literally a phone call away, an email away. We're traders. We work with traders. You get your questions answered. We can help you. Okay, if you're a struggling trader and you're literally just having a hard time pulling the trigger, or you just can't figure out what to do next, you're not alone. But I can assure you this, that we definitely have a lot of traders that have turned their trading around using Market Profile. And I'd say I've probably seen the biggest success rates come out of this. So hopefully you guys can adapt to that. At least join us on a guest pass and learn something. Okay, you got everything to gain, nothing to fear, nothing to lose. And at the very least, even if you didn't buy the software today, or take advantage of the offer, you get a free guest pass and you can come watch it done in real time, so that way you can gain a better perspective and make the right decision moving forward. All right. So thanks, Kathy, for letting me be here. Appreciate the time. And until next time, traders, have a good evening. I'm going to break. Going to break for some food and carry on. Take care, traders.